Greetings, my name is Kevin Matthews and I am the tax professor. Welcome back to class. Class is still in session because the learning never stops. And today we're going to talk about one of my favorite subjects, and that's the Foreign Earned Income Exclusion. Here at Beta Solutions, we pride ourselves on being experts in the international arena. And so I think we have a lot to offer when it comes to this area. And one of the very common questions that I get from people living overseas is that, hey, I hear that I don't have to report any income if I make under a certain amount. And oftentimes what they've thought is that that translates to, well, if I don't make any more than that, then I don't even have to file taxes whatsoever. Let me stop you right there. Yes, you do. You still have to file taxes when you're living overseas, provided that you make more than the minimums that would be required otherwise, whether you're in the United States or not. In order to take the Foreign Earned Income Exclusion, you have to file a timely tax return in order to be able to get that done. How does the Foreign Earned Income Exclusion work? And the way it works is that you can exclude up to $103,900 of foreign sourced income. Now, what does foreign sourced income mean? It means income that you actually earn living outside of the United States. That income can be excluded. So say, for example, now, you live outside the United States, and you're making $100,000 a year, and we'll say that you're living in, very good country, Morocco. You're living in Casablanca, living the dream. And they go ahead and they say, look, we're going to send you back to the United States to go meet with some clients over there because you speak better English than we do. Why don't you go ahead and you go ahead and take care of that? It's like, okay, fine. So you fly over. You do 5 days worth of meetings, and then you fly back to Morocco and you go to report your tax return. You can't take 100% of that income and exclude it. What happens is you have to attribute the 5 days that you were over in the United States working as part of the income that you cannot exclude. Now, the way we do it here at Beta, we actually have forms that actually calculate that for us. These are forms that I've actually designed using my intricate knowledge of Excel and the tax laws in hand. So we actually work with our clients to kind of figure out how much that money is. But then what we do is, so we do a travel tracker on you, and we say, hey, during the year, tell me where you were throughout the entire year. And if you did go back to the United States, did you work? Because if you didn't work, that income doesn't get attributed to your time over in the back in the United States. Okay, so that's why we want to make sure that we're actually tracking the time that you're actually doing. Now, another reason why we track the time is because the qualifications for the Foreign Earned Income Exclusion falls under one of two rules. So the first test that we have is the physical presence test. And the way the physical presence test works is that you have to be outside of the United States for 330 days out of 365 days. So 330 out of 365. If you're able to do that, you're able to exclude all foreign sourced income that exists within the 365-day period in question. So say, for example, I leave to go to, say I leave and I'm going to go work in Germany. And I leave to go to work in Germany on June 1st of, say, 2018. From June 1st all the way till May 31st is a 365-day period. I have to be outside the United States for 330 days. Now, does that mean I have to be in Germany for 330 days? No. I can be in Germany. I can be all over Europe. I can be all over Africa. I can be, I can even fly as close to the United States as Cuba, and not worry about that. Now, Cuba's got some weird rules. Don't go to Cuba. That's probably a bad example. And say instead of Cuba, the Bahamas. Okay, I go to Bahamas. It's still outside the United States. You have to be outside the United States for 330 out of 365 days. Now, if you're able to do that, you will qualify for the exclusion for that period of the 365 days that we were taking into question. So, if for some reason you don't qualify when you immediately arrive, but you qualify, say, 3 months later, 3 months that you work in the foreign country that's not qualified will still be taxable in the United States, double taxed. Now, if you work in another country like Germany or something like that, you're probably paying foreign taxes. You're not going to have to worry too much anyways, and we can help you navigate that if that takes place. The second test that we talk about is what's called the Bona Fide residence test. Now, the Bona Fide residence test basically says if you are a bona fide resident of another country and you fit certain requirements, you don't have to worry about travel days and where you've been and all that sort of stuff. Now, what is the main difference between these two tests? I would say that the 330 out of 365, the physical presence test, is a mechanical test. You either qualify or you don't. It's like being pregnant, folks. You either are pregnant or you're not. There's no sort of, well, we're kind of. You either qualify or you don't. If you don't qualify, you don't get it. And if you do qualify, you do get it. The IRS loves these kind of tests. Reason why is because it's straight up and down. You either qualify or you don't. The bona fide residence test, instead of being more mechanical, it's more what we call facts and circumstances. And you have to hit certain facts and circumstances in order to be able to qualify for this test. Now, there's a lot of legal cases where they talk about this because facts and circumstances basically means the IRS is going to interpret it one way, you're going to interpret it a different, and sometimes we have to get in front of a judge and show them. Now, some people will say, well, if I got to go to a judge to prove this, do I really want to use bona fide residence? And the answer is, I would still use it. The facts and circumstances are going to line up, and experts like us who actually deal with this stuff frequently, we're going to know what the facts and circumstances if they're going to line up or not. And if they don't line up, we're going to tell you flat out, you need to do the physical presence test. And there's certain other things that you can do that can actually kill a bona fide residence test. One thing is signing a statement with the local country that says, I'm not subject to your taxation. If that ends up happening, you can't do bona fide residence as a result of this. So another thing I want to talk about here is that we talked about how we can exclude up to $103,900, but there's also an additional amount that you can exclude, which is going to be a housing amount. Now, the housing is, I could go over the rules. This video is going to explode in terms of time, and I don't want to have that happen. But essentially what happens is, if you have housing costs that you are incurring by living overseas, part of that gets to be factored into an additional amount that you can exclude from the foreign earned income exclusion. And it depends on where you live, though, because if you live in a very high cost area, you may be able to qualify for more of an exclusion than otherwise. And here at Beta, like I said, we deal with this all the time. I have clients who live in London. I have a couple clients who live in New Delhi. I have a client who lives in Mumbai. I have another client who lives in Singapore. We deal with this kind of thing all the time. And I have clients all over in different areas too. But one of my favorites that I always use to quote is Hong Kong. Last time I checked, I think Hong Kong, the housing costs can be up to $104,000. Guys, I've been to Hong Kong once, or actually twice, sorry. I've been to Hong Kong twice. It ain't cheap, okay? I remember we went there and just a nice cup of coffee sometimes would run us, almost $10. It's not a cheap place to live. And so as a result of which the IRS realizes this, and they say, look, if you're a resident of Hong Kong, we're going to give you kind of a break on that because, the housing cost, the housing costs they're going to give you here, $16,000 just won't even get you a decent carpet on a street in Hong Kong. So, they have to have the higher costs. And so Congress, gave this kind of a break when they were talking about the 9/11 exclusion. So you need to make sure that if you're going to do this, you have to fill out what's called Form 2555. Guys, take a look at it. If you have any questions about it, feel free to put it down in the comment box below. I'll be happy to answer it. I'll tell you what, all I can say is thank God for tax programs that actually fill this stuff out. Sort of on a side note, let me tell you a little bit about me. When I was much younger and I actually still had hair, I actually was an English teacher in Japan for 2 years. And so one of the things that I had to do when I filled out my tax returns, I had to do all this stuff by hand. Okay, so filling out the 2555 and also understanding physical presence tests and all that other stuff was always daunting, to say the least, for me. And so as a result of which, I've always been kind of a little bit leery about trying to do some of this stuff myself until I started getting really into this international stuff and really helping people out. And so it's been helpful ever since after that. Okay, so that's all I got to say about the foreign earned income exclusion. There's tons to talk about other than that, but I'm going to hold that off for other videos. My name is Kevin Matthews. I am the tax professor. Remember, class is still in session because the learning never stops. If you want to reach out to me, you can do so by going to the comment box below. Or you can reach out to me on my website. It's www.betasolutioncpa.com. Again, that's www.betasolutioncpa.com. If you like the videos, please go ahead and like them. And if you want to learn more about the different types of videos that we're going to have, please feel free to go ahead and hit like. And I'll be able to help you out. I'm sorry, if you really like this video series, go ahead and hit subscribe. Gosh, I'm dealing with this head cold. It's just not going as well as I would like it to. But you know, again, I really do enjoy doing these videos, and I hope that you get some knowledge from this. And if you feel like you need more knowledge, please use the comment box so that all of us can learn about it. And I'll be happy to share as much as I can with that. Again, thank you very much for watching this video.